What's up, folks? This is the December 2022 monthly market update, the last update of the 2022 year with myself and Dean, and where we kind of update you guys on what's been happening in the latest Hawaii real estate statistics and some other news across the country and impacting investors. If you guys have any questions, comments, put into the chat. But yeah, let's why don't you start here, Dean? What's been going on with the prices?
Yeah, so some very interesting times. You know, all the signs except for one have been showing kind of like a decline and more towards a buyer's market. If you can look on the left hand side, we have single family. Yeah, so median single family price for November 2022, 1.1495 million, which is an increase from prior of almost 10%. So that's the only signal that we see for that's positive for sellers. However, if you look, closed sales are down 48% for single family, and same thing for the condos are down 43% on the right side at 340 closed sales. Um, Back up, you see median condo prices are slightly down for $180,000 for the median condo price, and days on market for both condos and single family are at 18 days, which is a big increase or slowdown for both sides. Yeah. On the next slide, I put in so you can see a little bit more detail. Lane, I think you're the driver for this one. Yeah. Um, Back up one. Oh, interesting. I think we have a different slide deck. How come? If you go back, can you go back one?
Did you upload it real recently, there, Dean?
Um, yeah, I think yesterday I was working on it.
Let me try and update it real quick.
Okay.
Last monofront. Let's try this deck right here. We'll remove this one, and we will get this all edited for everybody in the podcast and the YouTube channel, um, so you guys can skip over this later on. There we go.
So yeah. So on this slide, yeah, exactly. I wanted to show it's a little bit more detail, but it shows the number of sales current year in November 2022 versus 2021. So you can see the big drop, yeah, from 371 sales for single family last year to 192 to give us that 48% decrease for single family. Yeah, and then same thing, we see a big decrease. We went from 601 sales for condos in November 2021 to 340 in the current month. And so, it's really interesting times. And so I always like to show these visuals as to what's going on, right? So, um, homes for sale for November, we see single family, we have 741 homes, and condos, we have 1,308. If you look at this trend since 2005, it's not really high, but as you can see, if you're looking at the tail end in the last year, it is slowly creeping up from what we've had in the past. Um, if you go to the next slide, Lane, we have days on market for a year. As you can see, we're kind of slowly starting to creep up a little bit, but still below what we had in the beginning of 2021. Um, looks like it's creeping up, but in perspective, when you look at like the 10-year trend, it's still low, relatively low compared to what we've seen in the past. So, you may be hearing a lot of doom and gloom. We hear it everywhere. We hear it in the stock market. We hear it, interest rate trends. We're getting into real estate also. Um, I feel like we're not seeing a lot of doom and gloom stories here in Hawaii as much as we're seeing in the parts of the mainland. I think we mentioned Las Vegas recently. They've had like a triple in terms of their inventory increases because of largely in part of the economy and the rising interest rates. So I feel like the market is softening, but just keeping in mind that it's not as doom and gloom as some people are pitching it. Yeah, so something to consider. So yeah, the next slide we put the months of supply of inventory. So we like to keep that. That's basically if we were to have no more new inventory into the market, how long it would take for the existing inventory to sell off. So as you can see for November, we had a slight dip from prior months. So it went to 2.7 months for single family and 2.6 for um, condos. And typically they say the point of equilibrium is about 5 to 6 months of inventory. So if you go by that definition, we are still in a seller's market. Um, let's see. Yeah, and again, in the long haul, if you're looking at the 10 years trends, we're still relatively below the average what we've seen in the past. Yeah. So some good news, or it depends how you look at it, but I feel like it's good news. The As of yesterday, I pulled this from Mortgage News Daily. We have their 30-year mortgage at 6.29, which has come down a lot since in the last month, where we're above 7%. So good news overall. I think from the buyer standpoint, loosening things up more. Hopefully, more buyers will come. From the seller side, good because more competition from the standpoint of buyers for to put in offers. Same thing like commercial. Hopefully, Arlene, I'm thinking the commercial side, they're looking for some relief in terms of the interest rate side.
Yeah, I mean, where we're in a point, we call it price discovery, since like, seller buyers, they still think that their property is worth what it was a year ago or even 6 months ago, but they don't empathize with or the sellers don't empathize with the buyers that the buyers' affordability, they can't afford as much based on the interest rates and their loan terms. So you have two parties that are probably more further apart than ever, which is why we call this price discovery mode. It's not unfortunate times. I wouldn't say it's fortunate times. It's kind of unusual times. It's kind of like things are kind of up in the air.
Yeah, yeah, yeah. Good point too. And we are seeing a lot of price improvements too in terms on the residential side, where a lot of clients are calling me and saying, "Oh, what's going on? I see a lot of you know houses sitting on the market longer, improvements, like we like to call them." But to your point, Lane, it's part of the discovery, right, where the sellers and the buyers are trying to come kind of match up now. So you're seeing it at the
What
residential
happened with
side.
that one that I was showing you? Were you able to talk to the agent? Where they getting desperate or
I did it. I'll reach out as the seller financing. I'll have to follow up and get back to you. Yeah, it's still sitting. That's why. So
okay?
I'll
You're still playing. You're
definitely.
being still being cool then, right? Just like
Well, he
let them
reached out to
wait.
me once so far, and so yeah, I will definitely follow up on that.
Yeah, yeah. Just wait 3 days. Apparently, is the rule. Is what I heard. Just
it's like
joking there.
it's like dating.
Yeah, yeah.
It's like the
But
first date.
maybe it's like 3 weeks. I don't know. We'll see.
So so in the previous slide, I was talking to you about I like that Mortgage News Daily slide. So what I clicked on this slide is this is a screenshot off of one of the local financial institutions, and to see what kind of rates they were publishing. And so this is off of one of the local institutions sites, and I just wanted to point this out because I wanted to see what they had, and I was surprised they had for the 30-year fixed they put 5.625, and I was like, whoa, that's a lot different. But it mainly is because you're paying down your rate to with points to get this 5.625, and I'm not sure why this bank chose to put it this way, or you know publish these rates. Um, but I guess my point is when you're comparing, if you're out there shopping for loans, make sure you're comparing apples to apples, right? So initially, on the slide before, the Mortgage News Daily was the 6.29%. I believe that's because that's again that's like their national average, and that's also because they're not talking about any pay down with any type of points. So make sure when you guys are doing, either you're asking all of the competition, okay, quote me um, a rate paying 2.125% or points, or say, just to keep it simple, I just say, quote me paying 0 points and give me a what your 45-day lock is, because 45-day lock, that's also an important term because they might be quoting you on a 30-day lock. So you got to make sure you have apples to apples. In this scenario, it's the bank is using a 45-day lock for what they're quoting us on. So just wanted to bring that up as a quick tip for you buyers out there who are shopping around for residential loans and pre-approvals. Yeah. So I've been looking around at different. We're always online looking for great content. So I was just looking around and I googled um, best places to live. So one of the best places to live in Hawaii. So one of the articles I found was from this Extra Space Storage, and they gave us the five five safest and most affordable neighborhoods in Honolulu to live. It's kind of interesting video, so you might want to watch it. You can find it on YouTube. I'm not saying I agree or with these selections or not, because safety, these do appear to be great neighborhoods, but affordable. That's the biggest question. Because when if someone came to me and I know that their financiers were tight and were looking for quote unquote affordable homes, I'd have to say that these five neighborhoods would not pop up in my top five. But so point being is just every one is there's a lot of information out on the internet, so take everything with a grain of salt, especially someone, if you're looking to move somewhere, maybe not even Hawaii, maybe you're looking to relocate somewhere else. Make sure your due diligence is corroborated with something else. So another article I found that was pretty cool was from Niche, and it talked about the best places to live in Hawaii for 2022. So the top five that they noted, number one was Maunawili. And interesting about Maunawili is I actually found Maunawili in multiple best places to live in Hawaii searches. So
Is that
Maunawili was
Mililani? Is that the
no, that's out
lower?
on Windward side.
Okay.
Yeah. So
This is
so that
probably
was
this is probably a puff piece written by the Monowili Development company out there. That's often how these silly top places or these. I mean, market like all these news articles are all puff pieces these days. I mean, how much did
what
Sam Bankman-Fried pump into all these fake articles for himself?
well it's
Altruistic, billionaire philanthropist, all BS. You know.
But it was weird because it popped up in multiple as number one. And again, so Maunawili is out right just before Kailua when you're going over to the windward side. But I thought that was really interesting, and I don't know, it's probably based on the parameters. Maybe it's because the population is smaller. I don't know. So anyway, moving on. Number two was Honolulu. Three was Kailua, which is adjacent to Maunawili. Four was Hilo on the Big Island of Hawaii, and number five was Mililani. Um, Mililani Mauka popped up on another one too. That specifically, I thought, and again, take everything with a grain of salt. Read into how they got their their selection process and what they went through. But it's always kind of fun to look through these and
I mean, you
how
you can
they're
change
selected.
the rubric however you want to get the winning candidate. I guess my whole thing is, I'll say it because you don't want to say it, is if you're not from Hawaii and you're just looking at like random cities and names, call Dean up. Don't be a bonehead and like, if not, you're gonna find yourself in like Eva Beach and commuting 2 hours to work every single day.
Thanks, Lane. Appreciate that plug, man. Okay. And I know you always talk about rentals statistics because as landlords, that's always good for us to know. Um, from the standpoint on real estate in Hawaii, I've always talked about the sales side, and I never talk about the rental side hardly. So I found this article, which is kind of interesting from the U.S. News and World Report. So when you're looking at one bedrooms nationwide, the states with the highest one bedroom rent estimates for October 2022, Hawaii was actually the highest at $1,700 for a one bedroom apartment, followed by New York, California, New Jersey, Virginia, Florida, Massachusetts, Maryland, Colorado, and Washington. I think said that Colorado was the only non-coastal state out of the top 10 that made made the list. So I thought that was kind of interesting, and one of the things, yes or no, lucky we live Hawaii, right? So next slide. I always talk about the scams of the month. This is our last, maybe our last video, maybe our last Braddahs podcast, Aline. So what? I'm gonna skip over the scam of the month because I'm tired of talking the scam of the month. We've always talked about these,
Yeah,
and
it's always
it's
kind of
always the same
negative,
story.
right? Like, look out
Yeah.
or be careful, kind
So
of a thing.
let's. Well, this is the second to the last thing I want to talk about, but this popped up in when I was looking at the Yahoo Finance. Airbnb is going to be restricting unauthorized New Year's Eve parties nationwide. So hopefully you're not one of these guys that booked a single family home for one night on New Year's Eve, planning to throw a party because their Airbnb as a rule has is gonna not allow these 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 bookings, and they're also going so far as to I guess reject bookings from parties who don't, I think, that haven't had a positive review, so haven't, first time Airbnb users will not be allowed to book these New Year's Eve, and there's certain parameters that are they're not allowing. So I thought it was kind of interesting, and so I don't know if you're heading out of out of state, out of country, like I am um, for this holiday season. But if so, just be wary if you're trying to throw some crazy Christmas party, New Year's party, or whatever it may be.
Yeah, and I hear
And
Airbnb is kind of like people on Airbnb are starting to struggle. Like post pandemic, a lot of people bought these nice houses because they wanted passive income, right? Like, but like now they're starting to see like the demand is decreasing and there might be an oversaturation. And
you know,
I just saying I should have told you because it's a discretionary spending item on people's budgets.
you know, and then if you
But
talk about Oahu, that's a whole nother kind of worms because
yeah,
I do get calls from investors who they want to buy in Hawaii and they say, oh, we want to do short term rentals, and I'm like, ooh, a little bit challenging these days.
yeah, yeah.
But we
But
did
I
find a
get it.
nice one in
Yeah.
Japan, in Tokyo.
Can't find the financing though.
Yeah,
Numbers don't
yeah.
work.
Oh no,
And
we're staying in a nice one in Tokyo
oh, okay. See,
this holiday
that's the
season,
equation you want to be on, right?
right?
Like, you want to be renting these things, not the owner operator of an Airbnb. Um,
And funny that you bring that up because that would have made it good content. I should have thought to put it in, but um, one of my other half wanted to was consider buying some property in Japan close to Tokyo because they have what's called akiya, which are just um, houses are actually full neighborhoods that are kind of being abandoned because everyone's moving towards the metro, moving to the where the action is at, and these
A shrinking
rural.
population too out there, right?
Yes, so we have these properties that are selling for sale for 15, 20,000 US dollars, and with the exchange rate maybe even better. But that's because there's actually more cost to get it up and running than the property is worth. So because there's a lot of rules and laws, whether it be like earthquake or just compliance, that to get it up to current standards, you're gonna have to put even more money just to get it there.
Yeah, that's
So
like the clickbaity articles on like, oh, you can buy a house in Detroit for $1. Like, well, yeah, when you take it over, they hit you with all these ordinances and back taxes and back fees. That's yeah, it's worth negative, which is why they can't sell it for a negative. They sell it to you for $1, $100,
right, right,
kind of
right,
a
right.
thing.
So yeah, I mean, and so we gave that up because we actually looked at what the rent was, and it's like $300 to $500 to rent out that same similar property. So if we wanted to retire in Japan, we should just go and pay that cheap rent, I think.
Yeah, man. Yeah,
Yeah.
man. Um, but I guess that's the old school way of thinking. Like people like to own hard, real hard assets
Right.
directly. So that's the mindset difference, I guess.
Yep. Yep.
Um, yeah, I don't know. I mean, Airbnb. I mean, it's the. I don't know if you stayed in an Airbnb recently, but like some of them make you like clean up all your stuff, like you're the damn housekeeper, and then they still charge you like a housekeeping fee that's like a few $100. It's like I don't know. I mean, it's like you're trying to save money on there, but it's just as expensive. And what I don't like about it is like it's ran by an amateur, somebody who just
Hmm.
did some e-course online and is running it like a mom and pop business, which is I'm all for, right? But like they just aren't as good as a large professional brand and
Mm-hmm.
institutional operator. But
Yep. Yep.
yeah, there needs to be. I mean, that's just happens, right? Like this is kind of a newer thing. Everybody rushes out to get educated on running their Airbnbs because long-term rentals the cat doesn't cash flow as well
Right.
anymore.
Yeah.
And then they go out and they buy this stuff and there's an oversaturation and then they thought they were super smart because they found the website like airdna.com, but apparently everybody has airdna.com, so it's really not much of an advantage. And yeah, they learn what it takes to be a real entrepreneur and um, be hit with free markets and competition and having to lower their prices to get utilization up.
Yep. It's a low barrier to entry. That's
Low
why
barrier to entry, right?
it
Yeah, I
brings
guess
out
stay
all
away
the
from that.
riffraff. Yep.
Yeah,
Yep. Yep.
yeah.
Exactly. So I just wanted to end my half of the this episode with to say to offer gratitude for what I have. Lane, thank you for all that you've done for me. I always appreciate it. Even prior to us jumping on this podcast, it was great talking to you. I always appreciate you and your feedback and you pushing me. So all the viewers also very appreciative of that, and overall just our health. Oh, I got my COVID booster and my flu vaccine. Oh my gosh, I got kicked in the butt 2 days ago. So hopefully
Yeah,
that will grateful for the medical science too. So, but
yeah.
anyway,
Yeah, if this is the last of this podcast, some people can will call it a failure, but really we learned I think we learned something. We got better as presenters and speakers, and we can always have a drink over and be like, remember the time we did this dang thing for 60 freaking times?
that's pretty cool, man. And hopefully it'll be preserved in online for infinity, so our kids and grandkids can find it someday.
Yeah, yeah. Hopefully they'll have something better to do, but if they're bored, it'll be here. Yeah. Or they can read my book, The Journey
Oh,
to Simple Passive Cash Flow, which getting like 25 people bought it last week, so
Oh, congratulations.
maybe 100 people will buy it this month. That's kind of crazy. But if you guys can get it for free, if you guys want, just go to simplepassivecashflow.com/book, and if you guys write a review, I'll give you $10 next time I see you. Uh, I'm being serious about that. But yeah, let's get into it. So FTX and Alameda Research. This guy is Sam Bankman-Fried. SBF is what we'll refer to him. Have you been following this one, Dean?
A little bit, not. And that's why I'm very willing to hear, but I just bummed that the my Ether and my Bitcoin are just so down.
Oh, okay. Yeah, I wouldn't worry about that too much. I mean, this is more around like the exchanges, right? Like BlockFi and FTX were exchanges. All the cool crypto kids all keep their own keys, right? In their own USB keys or whatever. Um, they don't put it on these exchanges. So then that's the danger part, and that's where FTX, they were found to be an unscrupulous holder of this stuff. So what they were doing was people would upload their crypto on this platform. They thought FTX was going to give them a safe return, anywhere from 5 to 15% normally for different coins, and it seemed like a good deal, right? People could store their money on here and make a pretty damn good return, hell of a lot better than any CD or anything like that. But what they didn't realize, there was no transparency, and there was nobody watching these 8 cookie cats in a Bahamas high lifestyle apartment. That they had this Alameda Research was a sister company, and they were doing these back alley trades with crypto and kind of funding with the FTX stuff. So this is known as commingling, and it is illegal. And but in the crypto world, there's really no like checks and balances. There's low transparency. This multi-billion-dollar FTX company didn't even have like a board of advisors having oversights over these kids. So um, the story goes deeper too. Like this guy was like dating this Caroline girl who he put as the CEO for Alameda. There was like tweets of like, she was like talking about how this drug with this psychedelic, I don't know, some kind of psychedelic drug or drug, like it's just like, and then she was talking about like polyamorous relationships. It's just like, all right, this, and she had no like working experience too, so it's like so like shady. It's like, why is she running a multi-billion-dollar trading company, Alameda Research? Obviously, SBF put them in there. The other, and these are all like the rumors, right? But they're pretty much like common common knowledge now. But the other thing was S so like they were dating, and then they kind of broke up, and then that's why it was really weird that there was like 8 of these guys all in the same apartment, right? um SBF's parents are super smart, and like one, like they're super versed in like securities and like fraud, and like some people thought that he was kind of a puppet to the parents. That was another conspiracy theory. Some people thought that this guy was just a puppet to like the people who wanted to kind of shut down crypto, because you need a blockbuster type of train wreck like this to enact restrictive rules, which I'm all for personally. I have to live by all these SEC stuff. I think these kids should be able to need to. As far as I'm concerned, all these altcoins, other than Bitcoin and Ethereum, are securities. They're just venture capital, wild ass projects to me, and I don't think anybody who's non-accredited should be able to invest in them. Maybe I'm showing my age there, but that's my feelings on these things. Um, the other things, part of the story, and I'm actually fascinated. It's kind of entertaining to me, as you can tell. So he was actually the second biggest donor to the Democratic political group. I think like Biden. He also gave money to the Republicans, but he says that, and I'm quoting him. This is not mine. I'm not saying my political views, but he was saying like, well, the Republicans, or nobody, people will think I'm a jerk for giving money to the Republicans. So I gave money through this like dark portal, so you can't track it. But so he's giving money to both. The question is, well, why? What was he getting in return, right? And I think a lot of the conclusions were, a lot of this people turned a blind eye to until it got to this point.
It's funny you mentioned the regulation and the need for it, though. I mean, but I think just was it yesterday they talked about that Bawani guy and Theranos and was that Elizabeth Holmes, the one Elizabeth Holmes, the
Yeah, the
CEO,
one
went to
before
jail.
this. So Elizabeth Holmes is
Yeah,
probably happy that this happened. She's kind of off the last
yeah, he
chopping
got a
block. Yeah.
longer sentence than her. But I mean, and they were you mentioned the love affair and all that kind of stuff, and this was a SEC regulated company, right? So even with regulation, these things happen.
Well, no, they weren't. They weren't. So none of their stuff was really audited, and there was no,
Oh,
no transparency. And that's exactly why these guys could kind of operate and pretty much do whatever they wanted. Um, and like here's my craziest thing, right? Like this company had these huge. Okay, there's two parts. They had these huge backers. There were two categories. One was all these celebrities like Giselle, Tom Brady, that guy, a lot of actors, and he hung out with Steph Curry supposedly and had dinner with the CEO or whatever. But like that stuff, I know, like that's all BS, right? That's all
was
these
it
puff
Taylor Swift too,
pieces.
right?
Well, yeah, I'm sure, right? Like, and they were all like paid sponsors of all these platforms. That's engineered celebrity. I think anybody who's watching this video knows that we don't live in. They're not dubious enough to believe that like that those aren't paid people off for that. That's everybody knows that's sponsorship. How sponsorship works, but the lesson learned is just because some cool athlete is investing in something or FTX Arena. I actually went to Miami Heat game the other week, and it was still FTX Arena, but or like the Staples Center in Los Angeles is Crypto.com. Just because they shell out a whole bunch of money for that does not mean a company is legit, right? Or a name, some place in a top Hawaii place is legit. Like it's just all BS. That's how the media. Oh, I should say this, but a lot of times it's all made up, right? Like like all these top Hawaii agent, you just pay to play and get on those stupid lists. That's how it works. I don't say it. I'm not an agent, but that's how it works. In case you're wondering, Dean, if you have enough money and you want to pick a list you want to get on, that's how it works. So people out there listening, doesn't mean anything. It's just people pay to get on the list. Just like these, you look in the the airlines magazines on top dentist, top plastic surgeon. It's just a pay to play type of thing. Um, Now, what befuddles me on this whole situation is the second category. They got so many of these institutional investors, like I think BlackRock,
Oh,
SoftBank,
wow.
uh, like the Bain. Mick Romney's not at Bain Capital anymore, I think, but he founded it. But they invested in this stuff. Like a lot of like institutional, sophisticated venture capital and equity groups invested in this thing, but nobody did the real due diligence on what the hell these guys were doing. And if they would have gotten on a plane and gone to the Bahamas, they probably would have seen what a sham it was. But it's just like there's this big facade. Everybody thought this SBF guy was like, God, walking around in shorts and a kind of a crazy haircut, you know. But at the end of the day, I mean, my lesson learned, or I've said it before, is like invest in real hard assets that have some commodity value at the end of the day. But it's fascinating, this thing. It's like, how the hell did this all happen?
This could be
You
a
know.
like a the new the Enron of the 2022.
So the guy who I guess like investigated the Enron thing, I don't know what his title was. He's on this. I guess they put him as CEO of the company FTX. I
Oh my
think
god.
that's the case. just to dismantle all this whole shabacle,
Oh,
right? Like and
oh,
figure out
oh.
what happened. But like he quoted oh, this is a big, even bigger, way bigger mess than Enron.
Oh, I remember hearing that.
Yeah.
That's right.
Yeah. So like people with BlockFi.com, they lost all their money. I think I had like $3.50 in there. You know,
Oh, you
just
put something.
I put well, I had it just so I could like see, get the emails, like all like the sorry, we're filing for Chapter 11 bankruptcy, but I have $3 in there. I'll probably never get it back again. That's like, but but yeah, that's the FTX thing. Invest in real hard assets. I guess lesson learned. And when somebody, like in our groups, like we talked about, and we've talked about the staking thing, right? This is exactly what was
Right.
going on, right? Like you put money up to this platform, so the platform will kind of borrow your money or lend it on other people doing more risky trades, and you collect maybe 8% to 12% on your stable coin. And people, we would ask the question, all right, well, how do we lose our money? What's the risk here? It's like, well, if the market collapses and, things become insolvent, you're effed, right? And you may not get your money. But nobody really talked about, all right, what's the mechanism for that and the counterparty risk, which is ultimately what made this come down, you know?
But Lane, isn't that what banks and insurance companies do?
Exactly. But the banks and insurance companies have been around a lot, and they've done this back in the day, and they've gotten beat down by regulation. They can't do this type of stuff, and that's the reason why the CDs rates are so crappy, because the margins aren't there. You can't. There's no speculation really. So that's why um, the yields aren't there.
So to your point, if it sounds too good to be true,
I'll question it and understand what is exactly happening, and what is the mechanism for you losing your money. Do your sensitivity analysis. Um, yeah, I'm not saying that if something is too good to be true, it's not real, but investigate it more and question it. But I think the Terra Luna one. Did you hear about that one? That was the previous big one that happened.
no.
That one was done by like this Korean kid, pretty much engineered the whole thing, but they gave people like 18 or 20% yields on that thing. And that was just a huge Ponzi scheme on that one. Um, it was a stable coin, and it was built around this algorithm that would, like, when the price fluctuated, it would buy more of kind of the same thing. So it works up to a certain point, but at some point it just like kind of cannibalizes itself in a
Inflows.
way. And that was how that one collapsed. But that one, like, a lot of people, they were getting like these great 18, 20 something percent returns, and they would tell them 18, you can make, you put in 10 grand, you get a 2 grand every single, like, year, like, it's like, wow, this, thanks for the tip, man, I'm in too, like people would jump on this stuff in frenzy
Reminds
mode.
me of the .com days. When the
Yeah, there's
.com
always
came,
something,
yeah,
it's
you're
always
making
something.
money.
And then
Everyone was making money, and people were getting stock tips from their taxi driver.
yeah, yeah. And then, yeah, it was too good to be true, so we stop and reflect and ask the right questions. All right, well, how does software.com and xyz.com go down in value? Well, at some point this gravy train has to stop, right? Would have been, and then you as an investor need to make your educated decision what you want to do with your money. But I think the problem here was, what makes me sad is, like, a lot of people that invest in this type of stuff, like the FTX, or a lot of kids use like Robinhood, like that trading platform. These are unsophisticated kids that don't understand risk, risk and reward, Sharpe ratio concept, and they didn't know what they were getting into, what they're putting their money in. You know,
Yeah.
um, Yeah, I don't know. I don't know how to prevent the next generation. I don't care what other people do. I care what my money does, you know. So I don't know
Right.
how to prevent the next generation. Maybe you just tell your
Exactly.
kids like you cannot invest in things that aren't hard assets, and then they go and buy a freaking tulip, right? Which is technically a hard asset. But maybe you
Put it
add on
in.
the second layer is like you cannot invest in things that are not hard assets and utility value for mankind.
I'm sure you could build it in your trust somehow to a certain
Yeah,
age.
yeah. Just gotta teach them, right? I guess,
Yeah.
or bring them to the retreat next month,
Yeah.
right? So they can learn it themselves. But we'll get through these last articles here. J.P. Morgan, they're kind of going more into hard real estate here. They're buying up rental homes across the country. They're about to spend $1 billion in rental homes. Great time for them to do it, especially when prices are a little bit down. Um, the last rate hike was on November 2nd. I think that things will probably go up a little bit more. I have our bet here. Dean, you said that on October 13th, you thought that the rates were going to go to 8.5 or less. I thought it was going to go more. We've still got this bet ticking.
Fun, fun.
Things are what would you say 6.5% now?
Yeah,
I think
just under.
we're
Yeah.
what did you hear? Like maybe a couple more interest rate hikes next year? That's what I heard. Is
Yeah.
that
Yep.
consistent?
Yep. And they're hopefully gonna start tapering it off. Maybe not the 0.75. So hopefully, and then that's why the stock market last few days, or last day or something, looked shining. Right. I think for next week's discussion, Fed
Yeah.
meeting. Yeah.
And then we'll end it with wealthmanagement.com's top 20 markets for forecast multifamily rent growth. Starting at number 20, Austin, Texas, Chicago, Seattle, Philadelphia, Inland Empire, California, Los Angeles, Portland, Oregon, Tampa, Florida, Orange County, California. Now we're getting into the top 10. At number 10, Boston, Raleigh, North Carolina, Charlotte, North Carolina, Nashville, Kansas City, Dallas, San Jose, Miami, Orlando, and number one, Indianapolis.
Hmm.
And with that, um, any last thoughts and for the year? Any other things that capped us off, Dean?
No, just hopefully everyone has a happy and safe holidays. Again, this may be our last one, so if it is, then thank you for everyone who's listened to this point. Because I think, like you said, Lane, it was a pretty cool journey for whatever 58 episodes, and so different from how we started off and how we've changed throughout these 58 episodes in terms of what we tried, and so it was fun. It was great.
Yeah, I mean, I think that we did the first five. You said like you'd be kind of nervous doing it, right?
Yeah, honestly, I still am I have a little bit of anxiety, but I think that's because um, I appreciate what I put out there is kind of important to me, and I don't want it to. This is could be forever. This content that goes out there,
Yeah,
but
yeah.
it's fun. It's been super fun. So I really, again, appreciative and grateful for the opportunity.
All right, folks. Well, hopefully we'll see you guys next time. If not, maybe we'll see you guys in real life, person. But if not, we'll see you everybody next year. Bye.